Hey fellow traders, it's Christmas time again. Merry Christmas to all those traders who celebrate Christmas. Those of you who don't, okay, that's fine. Just bear with me here. It is Christmas time. There is Santa rallies on the go. There is price action on the go. And there are trading systems that the traders would like to know more about. As always, for those of you who don't know me, I'm Rob. And for those of you who do know me, welcome back. I'm going to do a whole charting thing for you today on the price action, support and resistance, just a sort of review of what we've done over the course of this last year. And I want to thank you all for all the support you've given me over the course of this last year. And we're growing this beautiful community together with our normal videos, our live streams. It's really becoming a lot of fun. And a lot of traders are benefiting from the great information and all of my 30 years of trading experience is being offloaded onto you so that you don't have to start again from scratch and work it all out for yourself. It will take you a couple of years to become a profitable trader, but at least you've got this head start. So we're doing the Christmas special today. We're doing the Christmassy thing because it is the Santa time, but I think the Santa rally's in the dustbin this year. It does look like we've had a bit of a blip in the market. We've had this little moment where they've said, "Ooh, interest rates might not go up or go down any further," and it looks like we might go into the new year a little bit weaker than expected. Everyone was looking towards a big rally and a lot of fun, but as I always tell you guys, the market is a 50-50 game. You never really know which way it's going to go. Even if you're a cyclical trader or a trader who looks at what's happened in the past might happen again in the future. You know, trading based on history. And this month the markets go up, and on that month the markets go down. While in December we're supposed to have the Santa rally, which isn't happening. Oh well, that's just life. After the charts, I'm going to teach you about my strategy and I'm going to go over it in detail again because I see a few of you are struggling with it. So, as you know, it's not the squiggly lines that make you money. It's not the systems that make you money. The system, the charting, the little candles, the little lines and the little squiggly things, that's a high probability trade. What you're looking for is getting into the market with a high probability trade. That's why there's all these indicators, there's all these systems and all these things that people are teaching you. But they're also teaching you that that's what makes you the money, and they're also teaching you that, you know, you need a win rate to make money, and that's just not true. What you need is a business plan with a strategy that will take you into a money-making area, a business plan that will show you how to make money, which has got nothing to do with squiggly lines, because what's the stock market, the Forex market, any market made up of? It's made up of buyers and sellers, a willing buyer and a willing seller. It's not made up of lines and charts and things, it's made up of people. So what you're effectively searching out in the market is, if you're a buyer, you're looking for a willing seller. If you're a seller, you're looking for a willing buyer. It's not that difficult. It's pretty straightforward. Think of it as if you're going to a shop to buy something. You're a willing buyer. The guy at the shop's waiting for you to pitch up because he's a willing seller and he's looking for someone to sell the stuff to. Simple as that, really. It's not about a squiggly line. So what you look for in the market, you look for liquidity. So you look for a high probability that there's going to be a whole bunch of sellers there so that you can buy something. Really easy. Not difficult. The strategy to making money is all about managing your risk. That's the important part. It's about managing that risk. And that's what I'm going to talk to you about after we've gone to the charts and we've had a look at a high probability system, the price action system that I've shown you guys over and over again. But I'm going to go into detail again and go over it again because I need to keep going over and over it again. Now, I am doing a series on other indicators of the MACD, the moving average crossover, the Fibonacci. I'm going to do VWAP. I'm going to do Bollinger Bands. I'm going to do a couple of others for you as well. But we don't trade with those. We never use those indicators. They're all lagging indicators except for the Fib. And at the end of the day, we don't need them on our charts. But you might be a person who trades with that indicator, or you might just want to know how those indicators work so that you can understand how other traders trade with the indicators, so that if you ever need to trade with those indicators, you know how to trade with those indicators. And it's always good to know a little bit about your business. If you're a brain surgeon, doesn't mean you don't need to know how to take someone's appendix out if you're a doctor. Just saying. So there's nothing wrong with knowing a little bit more about the market, knowing a little bit more about what's going on in the background. I don't talk about naming things and abbreviations and all that rubbish. That's worthless to you. That's meaningless to your trading. What you're looking for is a way to make money, not a way to name things in the market and little fancy like little terminologies and whatnot. Because you go on a course, you pay thousands of dollars for this course, and they teach you terminology. What on earth are you going to do with terminology? How is that ever going to make you money? They talk about gaps and gapping and fair value and this and that and the other, and it's all rubbish at the end of the day. You don't need that. What you need to know is you need to keep it simple. You need to know how to buy. You need to know how to sell. You need to know how to look for a good trade. Simple, really. It's not complicated. You don't need to know all this other rubbish. And most of you come back from your courses and you know everything. You know all about the markets because it's so easy when it's not your real money. And then you go and put real money in the market and suddenly the world changes. Suddenly everything changes. Suddenly you're in shock and you think, really? Why am I struggling to make these trades? When I was on the course, it was so easy. And now it's just so difficult. Well, it's Christmas time. Let me take you to the charts and let me show you how to trade. What the hell? It's a Christmas special, so you might as well learn how to trade properly. But while you're here, here's your Christmas gift. Go down to the description, get your free Forex book. It's totally free. Download it, enjoy it. It's there for you. If you want a video every morning with regards to trade of the day, join the membership. Become part of the community. You'll get all that as well. So let's go to the charts. Let's go and show you the best price action support and resistance system that will get you into trades. And then after that, I'll talk to you about the strategy that you need to use that system. Let's talk about good old support and resistance price action. This is a different kind of trade. This was one of our trade of the days, and this was a demand level on the 4-hour. So we do add demand levels and supply levels in between, but that's your main resistance and that's your main support. But let's go and have a look at something like a nasty one like the US 500. Let's see what we've got here. Now we've got nothing drawn on here, and we trade on the 4-hour. We swing trade on the 4-hour, but you can use this on any time frame whatsoever. If you want to use the 1 second time frame, that's up to you, the ticks. If you want to use a 5 minute, that's fine. If you want to use the day charts or the weekly charts, that's also fine. But I trade on the 4-hour because it's nice and relaxing for me. And also on the 5 minute time frames, no matter how clever you are, 99% of traders do lose money on the 5 minute time frames. But what do? Now I'm going to try and make this nice and straightforward and nice and simple because somebody did ask me for that. And that's what we're going to do. So we look at a chart. Now, the first thing you do is when you open the chart, now I want to trade the US 500 for whatever reason. And you look at it and say, well, firstly, I see it's been bullish. It's been very bullish. You can make it a little bit smaller just to give you a picture. That's been extremely bullish and it's been going all the way up. And then suddenly we had this big move. So something happened here. Obviously, news, fundamentals, that sort of thing. But a big red candle like that against all those small candles tells you this is a big event, so this is incredibly bearish. So what my experience tells me, and let me tell you guys something, experience in the market is important. If you've been trading in the markets for a week, you can look at these squiggly lines and you can choose a trade, but you don't have experience to tell you what's going to happen next. So when I saw this red line and I saw these little green lines and everybody else was thinking of taking long trades, I warned everyone. This is what we call a dead cat bounce. It sort of moves up and says, and it falls back down again. Because with such a strong red candle, that tells you these are human beings. Stop looking at them as lines. These are people that are trading. And all these traders said, ooh, I'm out of here. I'm selling all my stock. Why did they do that? Did they do that because they're stupid? Did they do that because they don't know what they're doing? No, they did that because they know something. They know something big time. And you probably know it too. So that's why they sold their stock. Because when we take trades in the market, any trade that we take with a view to the future. We're not buying it for what happens now. We're buying it for what's going to happen in the future. Whether that be your 5 minute future or your 5-year future really doesn't matter. Whatever you're buying it with a view to making a profit in the future. So you're not going to buy something that's not going to make you a profit in the future. You're rather going to sell it. And that's what's happened here. But now how do you determine in the markets on the squiggly lines where to buy and sell? Now the reason we use candles and the reason I use green and red candles is because a nice red candle like that, I don't have to think about it. I can see clearly that that's a bunch of sellers. It's easy. The green candles, that's a bunch of buyers. too easy for me to see it. Don't have to worry about what color it is, or people are so worried about the psychology of a color, and that that if it's red, then it's too red, and oh no, it's gonna freak me out when I'm trading. Nah. Please, guys, doesn't work like that. You need the colors to trade. What we do is we go to the day. If we're trading on the 4 hours, you can take your levels from the day on any time frame. On any time frame you're trading on. The day levels are very, very reliable. Now, if I put this on the day, the first thing I see is this structure has been pretty good to the long side. Very good structure to the long side. Put it on a line chart. Ooh, suddenly we've got a different picture. Suddenly this looks much cleaner, doesn't it? Now you can see that we've got a very clean upswing, a very clean bullish trend. Bullish means going up. Bearish means going down, for those of you who don't know. What we're looking for here is a bit of support and resistance. Now, I draw them in rectangles because support and resistance is not about a line. It doesn't go to a line and then suddenly go, oh, there's a line, let me turn around and go back. No, it doesn't work like that. It's an area that the price often gets to, and then it says, ooh, there's money there, and then it comes back from there. That's what it is. There's money lying here that traders have left behind, orders that have been left there, waiting for you to come along so they can sell, right? The reason we use the line chart is not just for clean lines, but also because the line chart gives you closing prices rather than highs and lows, because the candles give you highs and lows. So the line chart gives you nice little closing prices. Now we're looking for a support level. Where is the support level? The support level looks to be around here. Now these levels are an area where the price gets to on a regular basis, and when it gets there, it likes to turn around and go the other way because it takes the money there, takes the orders, and shoots up the other way. So these are areas that you're looking for. So this looks like a good support. It's hit here a number of times and gone back there. It's hit a couple of times and come down. You can also look for your trend support. Trend support is a little bit difficult on this one, and actually it has broken through trend support over here, so it's no longer a valid trend support. You could move this out and say no, but it's a little bit, but there's nothing touching here. Look at this. You kind of need 3 touches, so there's really nothing good about this. This looks to me like it's broken through its trend support. The trend support's gone, which means the structure's gone, which means this is bearish now. That tells you that with that big wrong candle. So what we'll do is we won't use that. We'll stay with our straight line support and our straight line resistance. Then we know that the trend resistance is broken. We know that. Trend support is broken. We know that. There's no point in worrying about that. Best case scenario, it'll go back up to the trend support, retest it because it's now resistance, and then come back down. But let's look for a level where we know there's a level. There's another level further down here. If it breaks through the first one, it'll probably come down to this one, which is further down. We'll just draw it in. You don't want to draw too many levels in because it's just going to confuse the hell out of your trading, and you honestly don't need that. This is the first one. This is the most important one. It's really close by. Now we go back to the candles. Then we take it back to the 4 hour because that's where we're trading on the 4 hour chart. Now what you got is a completely different picture to the day. What you've got here is that's the support. That's dropped. Look at how it was sitting in that resistance there. It's been sitting there for a while, dropped off, and it's heading down into this support. Should get down to these 57s. I did say that the other day, that it should get back to this level. If this level doesn't hold, it's all the way back down to 55. That would be a big correction, a decent correction in the markets. That's how you draw your support and resistance in. Now you know already that the trend support is broken. There's no point in worrying about trend. It's broken the trend. Trend is turning around. It's falling over. You can trade this short. Look, the short in all likelihood will get to the 57. Then you've got to worry about whether it's going to go back and go up at that point, whether it's going to break through and come down to the 55. My experience tells me that we might get a little bit of a Santi relief, a relief rally, but not much. And I think it's going to come down and head for the 55 levels in January if the same rhetoric carries on about the no longer dropping the interest rates and that sort of thing. Then you probably find this is going to correct all the way down to the 55. And then you've got to hope that that holds. Otherwise, she's heading down into the 4s again. So that's it. There's your resistance. There's your support. Breaks through that. That becomes resistance. And that becomes support. And that's how you draw your levels in. The reason we use the red candle, look at that red candle. That red candle tells you go short. It's broken out of the resistance. Go short. That green candle told you to go long. It was a good long. But now it's telling you to go short. That's why I use red. and green candles. Easy to see, easy to picture. That's all it is. And also I can see the tails. The tails tell me the buyers and sellers are getting back in. And you can see the hammer formations and that sort of thing, at the top of markets, which tell you the markets are turning around. So you've been to the charts. You've seen how the system works, how you can take a high probability trade, how to trade with price action, how to keep it simple. And now you're thinking, wow, now I know how to trade. But no, wait. No, you don't. No, not yet. Not yet. That's just a system. That's not going to make you money. That's just going to give you a trade. Because it's really difficult to look at a chart and say, do you know what? I'll go long. Or do you know what? I'll go short. So many people say to you, you can just look at a chart and decide which way to go. But you can't. Because how do you decide which way to go? So human beings, by nature, in our psychology, we need a reason to do something. If we're going to take a trade, we need a reason as to why we're going long. We need a reason as to why we're going short. We need to a reason for buying or selling. It's a simple concept, really. And for those of you who don't know, long is buying and short is selling. Okay, so now you have a reason to buy and sell. That's the charts. You have a reason. You've looked at a chart and you said, well, I'm going to buy this share and I know how to do it. But now you're just a mishmash of buying and selling. Now you're just looking at win rates. Now you're just buying and selling. But do you have a plan? How much money are you going to make off each trade? How much money are you prepared to lose off each trade? You're trading with real money here. This is not just like fake money. It's real money. Okay. So if you open a shop, if you open a store, you're going to know what stock you're going to have in there. You're expecting a certain amount of customers to walk through the door. You're going to have staff in place. There's a whole bunch of things that you're going to line up before you open that front door. Funny with stock trading though. With trading, people just start trading. They're just like, oh, we'll just trade that. I wonder when I should sell it. Yeah, think about that. Okay, so you need a business plan, and that's how you make your money. Now, the plan is this. My plan, you don't have to write it down. Put the pens away. You don't need pens. All you need is a little bit of memory here because it's 2 steps, really. It's not difficult. You see, I keep everything really simple. I don't make anything complicated for you guys. If there's anything you don't understand, you're welcome to ask in the live shows. And you're also welcome to comment, and I'll try and answer the comments. If I can't answer in the comment, please understand that I don't have time to sit and write 300-page answers. So sometimes I will tell you to go back and watch the video, or come and watch the next video, or come to the live show. Because sometimes my answers have to be as long as the one I just gave you. And you know how long it takes me to type that out? And there's a lot of comments, so it's difficult. So please comment. I'll keep your question in mind. If I can't answer immediately, I will tell you. I will answer it in the videos. I'll keep that question in mind and give you a proper answer in the live shows or the videos or something to that effect. If I can't, just type a quick answer there. But sometimes things don't deserve a quick answer. They deserve a proper answer. That's what I try to give you guys. So the strategy is simple, and the strategy is this. You have an account, and your account size is X. So I'm going to use $100,000 as an account size X, okay? Because it's an easy round figure. Your account size could be $5,000, it could be $50,000, it could be $1 million. I don't know, right? But 1%. You risk 1% of your account on every single trade. If you want to risk a different amount, that's okay, but keep it the same on every single trade. Otherwise, you're wasting your time. So the trick is this. 1% of $100,000 is a $1,000 trade. So now you're going to risk $1,000 on every single trade. Don't change it. The same on every trade. Get your psychology right. You see, there's a fear receptor in your mind that can't understand when you start losing money or you want to get your money, or it changes your mindset completely. It's very difficult to control yourself. So what you have to do is say, if I take this trade, I've paid $1,000 for it. That's it. It's gone. Write it off. Say, well, that money's gone. I bought this. I own it. I own this trade. This is my trade now. You're $1,000 in. But how do you get that $1,000 trade? How do you keep the risk the same? What you do, every single trade you take, you go and look for the invalidation period. And I had this question the other day, what's an invalidation area? The invalidation area is your stop loss. But the reason I call it an invalidation area is because that's what it is. You don't pick a stop loss like, oh, I'll just put my stop loss over there. No, it doesn't work like that. What you have to do is look at the chart, look at the trade, look at the system and say, do you know what? If the trade gets to that area, it's completely invalid. The trade gets there I would never take that trade if I walked in the door now. I would never look at that trade, and I would certainly not want to be in that trade if the price is there. That's your invalidation area. That's your stop loss. Then you go down to that area, which is usually a little bit away from where the money is, that gets taken a little bit below the lower low or something like that. And you say, okay, that's my invalidation. How much is $1,000 from there to the cost that I've got to pay, to the amount that I've got to pay? It doesn't have to be $1,000 exactly. It can be 1,010, it can be 990. Seriously, guys, don't be picky. That general amount of $1,000, okay, let's say a general amount of $1,000. Now, you've worked out the amount of trade that you can take. It might be one contract, it might be half a contract, it might be 10 contracts. Depends on the product that you're buying and the gearing that you have. It's not the gearing that you're changing, it's the price. So now you've got the size of your trade. All you need to know is that you've got a good risk to reward. So the policy is this. The second part of the business plan is make more on your wins and lose less on your losses. So to lose less on your losses, surely you have to be making more than $1,000 on the trade. So surely your target has to be more than $1,000. I don't say it has to be 2 to 1 or 3 to 1 or 4 to 1, but it does have to be more than $1,000. Otherwise you're wasting your time. Preferably 2 to 1, preferably you're targeting $2,000. And if you see that's a possibility, don't just take a trade and say, well, I'm going to put my take profit $2,000 away, and you can see it's impossible. You're never going to make that, because then you haven't looked at risk to reward, number one. And number two, there's no possibility of you making that target. So what's the point? So seriously, yeah, you've got to have a good risk to reward trade for this to work. So for that target to be there, that target's got to be a valid target. So $2,000 target, but it's got to be a valid target. So that's your business plan. Now you've got a $2,000 target, you've got a $1,000 stop loss, you take the trade. Click, I'm in, I've got a trade. If it goes into loss and it starts heading down to the $1,000, do not panic. Do not dollar cost average, because you will cry and you will lose money. And if it takes your $1,000 stop loss out, let it take it. Walk away and look for a new trade. Because the whole point of you putting the stop loss there in the first place was because it was an invalidation. So it's clearly invalid if it reaches the stop loss. Why would you move it further away? The trade's invalid. It isn't a good trade anymore. Furthermore, why would you dollar cost average if the trade's going to invalidation? It's a useless trade that you wouldn't take. So let it go. Let it take the stop loss and move on to the next trade. The probability is that if you take 10 trades, you lose 5, win 5. You just want to make more on the 5 that you win. That's all. So now, let's say goes a bit in loss, and then it goes into profit, and it goes into a good profit, and it's $700 in profit. Then what you do is you take your stop loss, which is $1,000, you move it up to break even, or maybe a little bit into profit, $50, $100 if it makes you feel better. Now the trade's free. Now that trade is costing you nothing. You've just scored $1,000 because you paid $1,000 for the trade. Now you don't have to pay for it anymore. Now it's free. Now it's a free trade. And there's often times that stop loss will come back and take that out, and you'll be peeved. You'll be like, oh man, that trade's zero now. But you didn't pay anything. You didn't lose anything. So, what the hell? You lost a bit of time. Why do people think that when they were $700 in profit and then the price comes back and takes out their stop at break even, that they somehow lost $700? You didn't. You were still in the trade. The trade was still valid. But when they go into a loss and they dollar cost average and they just keep building on the loss, they don't see that as a problem at all. And when it comes, if it does come back to break even, they have a relief trade. They don't count it as they made $2,000. They count it as, relief, I didn't lose anything. Yeah, no, exactly the same as if it was $700 in profit and came back and took the break even. You didn't lose anything, okay? So now it goes over $1,000. You start lifting that stop loss up to 500, 600, 700, and you start following it up. And when it gets to your target of 2,000, don't click sell. Move your stop loss right up behind it. Let's say 1,900. If it comes back and takes it out, you pretty much made target. You pretty much made what you wanted to make in the first place. And that's as simple as it gets. If it goes on and it keeps on making money, you make extra dosh. It's really worth it at the end of the day. That's as simple as the business plan gets. It's not that complicated in the slightest. Everybody seems to think that it is, but it's not. Straightforward, really easy, and you don't even have to write it down, guys. You can just use that and make money with it. You'll always do well with it. Somebody asked me about gapping on stop losses. Make sure you get decent guaranteed stops. Don't hold trades over weekends if you can help it, unless it's short, of course. Watch out for holidays and that sort of thing. And then you won't have those problems. You won't have those issues when you're trading. I do try to reiterate how to handle your stop losses and how to get them in place. Risk 1% of your account. You don't have to risk $1,000. You don't have to risk $200. Just risk 1% of your account. You don't have to follow these rules stringently. You can risk 2%. You can risk 0.5%. Totally up to you. Just keep the risk the same every single trade. Understand that you calculate the size of the trade from the stop loss in the first place, and then you can work around that and make sure that your trade target is a valid target at 2 to 1, because otherwise your risk to reward just isn't good enough. So guys, I hope that helps you. Merry Christmas. I hope you have a great Christmas time. I am going to make you another video for Friday. There won't be one on Wednesday, and we won't be doing the live shows this week because it's a holiday week and I'm having a holiday. So what the hell, I'm enjoying myself. For those of you who don't celebrate Christmas, my apologies, my week off. I will be back soon and I will be helping you with your trading. You're welcome to ask me on the community. You're welcome to ask me on the Facebook page, Learn to Trade the Stock Market. That's my Facebook page. Go down to the description, join it. There's a community there and you can, start interacting there as well. There's Logical Trading, the Facebook page, the actual page. You can like that as well. There's the Discord channel, but that's a bit of a pain in the butt, the Discord channel. I mean, there's scammers on there and all kinds of things. I rather just use the Facebook page. It's fine. There's the community right here on YouTube. Right here, we've got the community tab that we're using as well. Got any questions, ask them. We'll get to them and we'll answer them for you. Merry Christmas, guys. Thanks for watching. Till the next one. See you soon. Cheers and happy holidays. Bye.